Welcome back, guys, and welcome to another video of the entry models, and this is the third and last video of the entry model. So we have three entry models to recap: the mechanical model, the continuation model. The mechanical model is where we target on-filled gaps 5 minute and 15 minute after rejections, and then the continuation model is where we ride the wave with the market, and where the trend is our friend. Save this as a quote. Anyways, this model is gonna be the discretionary model, is where we target drawn liquidity, is where we target anything that is not fair value gaps, anything that is not just moves up or moves down, where you just hop on the move and get to the draw. So let's cover it. I want you to be fully focused on this because this is the most important model and personally my favorite. So yeah, I have a few examples. I have like 6 examples, and I have oh my god, sorry. And I have some explanations to do on the charts. So first of all, before we start doing anything, I want you to stop watching this video, go to the daily bias video, watch the daily bias video, understand the daily bias, because for this model you need the daily bias. You need everything to be with you, you need everything to be aligned, because this is the most important model literally out of all the others. You can trade the others freely without even going into this, but for me this is the highest win rate one. This is the model where I win most of my trades. I have like an 80% win rate easily with this model, and you can check everything on my journal in the Discord. I barely lose taking these setups because it makes so much sense to me, because out of everything that we have, this is the most clear one. You can trade other models, I'm not saying anything bad about them, but this for me is my favorite. It's the teacher's puppy, as they say. Anyways, let's get into it. So before you start doing anything, before you execute your setup, before you do anything, as we said, watch the daily bias video, make sure you understood it. I'm gonna give you a second to go. Okay, welcome back. Hopefully you understood the daily bias video. Hopefully you can now finally hop on the chart, read the higher time frames, read where the market's going, where the market wants to go. And yeah, so let's get into this setup. Let's get into this model, which is the model. Okay, anyways, this model is all based on drawn liquidity. This is where you need to fully understand liquidity. This is where you need to fully understand where the market wants to go. So to start with, you should know what a market maker buy model and sell model is, but quick recap: a market maker buy model is when NQ is just going higher, it wants higher, we're respecting bullish and disrespecting bearish fair value gaps. So when we're respecting bullish fair value gaps and disrespecting bearish fair value gaps, what does it mean? We're in a market maker buy model. Exact opposite, when we're disrespecting bearish fair value gaps, when we're disrespecting bullish fair value gaps and respecting bearish fair value gaps, what are we doing? We're in a market maker sell model. So first of all, you need to identify that. Are we bullish or bearish on the day? After you do that, you need to follow the bias. First of all, you need a very confident higher time frame drawn liquidity. This drawn liquidity could be, and we can see here, it could be previous session highs and lows, such as Asia and London. And for that, I have an indicator, which is the ICT kill zones, which if you want, we have 3 sessions during the day: Asia session, London session, and New York session. Asia session starts when market opens, so market closes for like an hour or 2. Asia session starts when this market opens, and then we have London session right after Asia, and then we have AM session. But ICT discovered that those are the best time for every single session. So for Asia, from 8 till 12, this is the best times to trade Asia, and this is where the banks of Asia hop on the charts, generate liquidity, sweep liquidity, do the big moves. The big moves happen, and where volatility is in play and where ICT concepts work. In other words, London session kill zone, and it's called a kill zone. Kill zone is when the banks are in. A London session kill zone is when fucking HSBC, is when fucking Nationwide, I know them because I live there, they enter the charts, they start trading. It's between 2 a.m. and 5 a.m. It's a 3-hour session where you have London and Asia, and then we have AM. I don't look at the kill zone, it's just what we trade, 9:30 till 11, or you launch 12 till 1, or PM 1:30 till 4 when the market closes. But most important thing here is you can use this indicator. Here are the settings. Time frame limit is the 30-minute, because other than that it's not clear at all. I personally use it at the 15-minute. I don't open the 30-minute, I don't use it that much. But Asia session and London session, I want to talk about these two. What do we mean when we say Asia highs and Asia lows, and London highs and London lows? Asia highs and Asia lows is the highest high in the Asia kill zone. So we have this whole Asia move happening. The highest high in Asia is Asia high. The lowest low in Asia is Asia low. Same thing for London. So those are very good pull to price and rejection to price, and they can sometimes determine my daily bias. And then we have previous session. Then we have data highs, data lows, which are, let's say, wicks. Let's say we have NFP. Let's say we have FOMC. Let's say those red folders that you can check on the website called Forex Factory. I should have showed you this in the daily bias. I filmed this video before daily bias, but daily bias is very important. Watch that before this one. Data highs and data lows. You should know what data highs and data lows are. They're highs made of the red folder news that we have. Low resistance liquidity run, which is, if you want, in other words, trend line liquidity. So if we're going up and then we're just going up with accumulation, all of this trend line liquidity is called low resistance liquidity run, or in other words, LRLR. And then we have equal highs and equal lows and relative equal highs and equal lows. As simple as it sounds, as easy as it sounds, it's highs that are at the same level. And then we have the intermediate highs and lows, which are beautiful for rejections. And when I said rejections, I meant these two. So intermediate highs and intermediate lows. Let's say we have a gap right here. This is a 1 hour gap, and it's a bearish fair value gap. Let's draw it. Oh, sorry. Let's say this is a 1 hour gap, and it's a bearish fair value gap, and we rejected that bearish fair value gap. What does this high become? The high that retested the gap. What does it become? An intermediate high. And why does this high reject? Because there are a lot of orders, because the gaps are inefficiencies in the market, or where sellers are present more than buyers, if it's a bearish gap case. So we go into the gap, we have sellers more than buyers again, and then we dump the market. So this high is the highest high where all the sellers were. So if we go there, sellers are probably going to step into the market. If it goes back to their entry, they're going to step into the market, have more contracts, have more orders in to dump the market slower. That's simple. So these are why intermediate highs and intermediate lows are very nice as rejections. So if you understood all of this, I want you to combine them and put your head in your fucking here and be fully focused with me, because these are what we call the high time frame down liquidity, which is what we want to usually target when we go for these setups. And also I forgot something very important. Oh my god, the 930 low or high, which is as soon as we open 930, you have either a move up or a move down, and then when you have that move up, this becomes a very nice target. It's like data. Recently it's been playing out amazingly, and I took like 4 trades targeting the 930 in the last 2 weeks. It's been playing out amazingly. It's been rejecting in a beautiful way. I'll show you the examples now, but first combine everything that I just told you, write them down, understand them. If you need to go over them, just go back in the video, watch them again. And then you need to have liquidity sweep plus SMT, and then you need to have your inversion fair value gaps, obviously our beloved ones, for our entries. So let's get into the examples. Hopefully it presents this time. Why is it not clear? Please, hello. Okay, bro, never mind. Don't fucking know what's happening, bro. Why is it not clear? Don't fucking know what's happening, bro. Shoe mask. Bro, what the fuck is this up, man? Guys, sorry, 1 second. I just need to refresh.